dear Forex traders, welcome to IFC Markets. You are watching weekly market overview made by IFC Markets. Let's start. In the past week, currency markets reacted in an interesting way as expectations concerning future directions formed. The strongest currencies were the Swiss franc and the euro, increasing by 0.46% and 0.29% respectively against the US dollar. The weakest currency was the Canadian, decreasing by 1.40% versus the greenback. In addition, on the negative performance side were the Australian losing by 1.07%, the Japanese yen declining by 0.84%, and the British pound lowering by 0.73%. The US dollar against a basket of major currencies managed to bounce up by 0.21%. Despite that economic events were not supportive for the European currencies, the euro and the Swiss franc were biased to the upside. The latter is due to market expectations that major central banks' monetary policies would get tightened. Capital has been outflowing from emerging markets and was inflowing to developed economies. The EURUSD continued its short-term positive trend up to resistance at 1.3773, while in the longer term is potentially forming an ascending triangle with cap at 1.3831. That increases chances for further rising development. The British pound against the greenback seems like it lost its positive momentum, retreating back to 1.6612. Following worse than projected employment report where unemployment surprisingly increased to 7.2% in the UK. In the immediate term, the currency pair is negatively biased and the corrective move could get deeper. However, decline from 1.6821 to 1.6606 represents a 38.2% retracement, and that presents to be a good correction before impulse wave resumes. Therefore, support at 1.6606 would be expected to be at least place a strong downside barrier. The USD JPY returned to 102.78. The Japanese yen was weaker against the dollar as the Bank of Japan enhanced lending facility, while the Federal Reserve reiterated its commitment to continue asset tapering. The USD CAD rebounded sharply from 1.0912 to 1.1192, which is slightly lower from major cap at 1.12223. Last Thursday's positive data for the US dollar underpinned upside momentum. However, on Friday, weaker US existing home sales weighed on the pair. Nonetheless, recent economic events have been sluggish for Canadian economy. Therefore, the Canadian dollar is expected to remain weak. As a conclusion, USD CAD pair could resume its upside bias in the coming week and likely to revisit 1.1192 or even major cap at 1.1222. Looking on the data front, on Monday, the IFO will publish German business climate and Eurozone will report revised CPI data. On Tuesday, US consumer confidence release will be the major event. On Wednesday, we will be watching UK's GDP growth data and US new home sales. On Thursday, the most important events are Swiss GDP growth report, US durable goods orders and US jobless claims. And finally, on Friday, we will monitor Japan's CPI, unemployment and retail sales data, Eurozone CPI, US and Canadian GDP growth report. You are watching weekly market overview made by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.